Hello and welcome back, students who are taking financial accounting. And in this video we are working on the chapter 1 problems, the B group, and we are looking at problem number 37. Now in the previous videos I said for this subject I want to keep the videos rather short, 10 to 15 minutes, but these here problems, when you're talking about 15 to 20 minutes, or in the case of this one here, 25 to 30 minutes to do, obviously it becomes difficult to make short videos. So, I've been trying to talk faster and more monotone in order to try to get the information in, but I'm going to start taking a slightly different tactic and be making multiple parts. Okay, so the videos will end up being parsed up for the different problems. And this is one of those examples in that this problem is going to take 25 to 30 minutes just to do, let alone me explaining what to do. So I will start in with this one, but realize that these problems are going to start having multiple parts, meaning you're going to have to watch multiple videos. And of course, if you don't understand something, rewatch the videos, and if you still don't get it, feel free to contact an instructor, okay? And so this one here, problem 1-37B. Income statement and balance sheet transactions. Prepare the income statement and the balance sheet. So in the previous problems and exercises, I had talked about the formatting of the balance sheet and the statement of retained earnings and the income statement. They were in the exercise problems. Let me just quickly look here. So we're talking about exercise problems E-1-28B that dealt with the balance sheet, and then 29 E-1-29B that covered the income statement and the statement of retained earnings. So in those I talked a little bit more extensively about how to format the financial statements. So if you need help with that, go back and rewatch those videos. As far as formatting is concerned, formatting is very important on the financial statements. So as I go forward, I'm not going to be explaining a lot of the formatting that I covered in that video. The reasoning why, you can rewatch those videos. If I see something that's different that pops into my head, I'll give an explanation of that. But for the very basics, go back and rewatch those videos in order to understand the format, why we're formatting the statements the way we are, such as the heading dates. The heading date for the balance sheet is very different from the income statement and the statement of retained earnings. But yet I see students format them both, all three the exact same way, and that obviously is wrong. Okay, even though the date, quote unquote, is right. All right. So Jill Schultz started an interior design company called Interiors by Jill, Inc. on June 1, 2014. Okay, so started on June 1, so we're talking about a fiscal year here, right? And the following transaction summarized the financial position of her business on June 14th. Right, notice that from June 1 to June 14th, right? After the first 2 weeks of operations. Okay, so what's being represented here obviously is the accounting equation and the ledger accounts that make up those particular categories of accounts, and obviously here's the balance in the accounts. Right? So during the remainder of June, right, the following events occurred. So from June 15th to June 30th. June has 30 days. So we're going to the end of June. So during the remainder of June, the following events occurred, right? So these are all of the events. All right, they're calling them events. The reason why they call them events is because some are transactions and some are not. So they're all events. Like we saw in the previous problem, there were some personal transactions that had occurred, well, personal events that had occurred, which are not transactions for a business, right? But we'll look at all of these anyway. So then requirements. Number one, enter the remaining transactions for the month of June into the expanded accounting equation, calculating new balances after each transaction. Well, I'm not going to calculate new balances after each transaction, okay? For the simple reason, if we're going to create financial statements, all I want to know is the balance in the account. So I don't feel like I have to create a new balance. If you look at the answer, right, you'll see that they put the balance. But when you're looking at the answer and you're seeing this, this first requirement, that is not how they do things in a journal or in the general ledger accounts in the workplace. Okay, the authors are trying to relate the accounts themselves to the categories of accounts. But reality is, and you'll see this in the next chapter, I hope, or the chapter after, and I've been trying to explain along the way that when we make journal entries, we make them as a debit and a credit. We have the account name, and then we have the balance, whatever amount that is. And that's how we make journal entries. And so you would have in your journal, all of these transactions, okay? And they'd all be listed, straight up and down in a 2-column journal, this being column 1 and this being column 2. Once we've made the journal entries, we would post them to our general ledger accounts, okay? And that's kind of like what they're doing here, okay? They're trying to take these transactions and they're trying to, it seems like they're skipping over the fact that, oh, we make journal entries and we skip over the fact that we make journal entries, and they're just jumping right into posting to the general ledger accounts, which these are the ledger accounts. And then, of course, you have the balances in those accounts. So they're really skipping over that one whole step. Also, too, your ledger accounts wouldn't be laid out like this. You would have, if you were doing them by hand or even in a computer, they parse the information separately. If you're doing it by hand, you would have one ledger page for the cash account, okay? And it would have the account number, and it would have a page number, and then you'd have the date of the transaction, and then you'd have the description, which would be your, whatever ledger accounts that you're going to use, and then you would have a debit column, and you would have a credit column, and you would also have a balance column. I mean, that's the more common one. You don't necessarily have to have a balance column, but it behooves you to do that because as we rearrange the information from the journal entries into the ledger accounts, let's say I debit cash for $100. Well, then I would update my balance to 100. And let's say I have on my next transaction, I also have 150. So now my new balance would be 250. And on the third transaction, maybe I have a credit of $50. Well, then my new balance would be $200. So I keep a running balance in my ledger account. And that's kind of like what they're doing here is they're trying to say, okay, always keep a balance after every transaction. Well, as you saw how quick and easy that is, it's a lot more cumbersome, to be writing, all of the balances, again and again and again for all of these accounts if I'm not using them, right? So you would have a separate sheet of paper, a separate ledger account for cash, a separate one for accounts receivable, have the same formatting, and then all you would do is just post the information to that particular account and update the balance. So therefore, I'm not going to be doing that here, okay? Because I don't need to know what the running balance is of each account. All I'm going to need to know is the balance after I've posted all of my transactions to my ledger accounts. I need to know that final balance for each account, right? So the reason why is because number 2, it says prepare the income statement for the month ended June 30th. Then number 3 says prepare the statement of retained earnings. And then number 4 says prepare the balance sheet. So that's generally what we're going to do with this problem. And notice that it took me 10 minutes just to explain, what I'm going to be doing for this particular problem. So I will be seeing you in the next video.